Silence has replaced the usual bustle at American ports, where the constant hum of engines and the clatter of cargo used to fill the air. Now the docks are eerily quiet, a stark contrast to the vibrant scenes of commerce that once defined these waterfronts. Massive cargo ships, their holds packed with American wheat, sit motionless at the piers. These vessels, once symbols of economic vitality, now seem stranded, waiting for orders that may never come. Not long ago, these ships represented the steady, reliable flow of U.S. wheat to China, a trade route built on years of trust and mutual benefit, connecting American heartland farms to distant Asian markets. But today, American wheat shipments are being turned away at foreign ports. The reason isn't a sudden drop in quality or a logistical mishap. Instead, it's the fallout from rising global tensions and shifting alliances, with politics now dictating the fate of every shipment. The impact is immediate and deeply personal. In the Midwest, farmers who spent months nurturing their crops now face a future clouded by uncertainty, wondering if their hard work will ever reach a buyer. At the ports, workers who once relied on steady shifts are seeing their hours slashed, their livelihoods threatened by forces far beyond their control. What was once a straightforward transaction has become a high-stakes gamble. Entire shipments are now being rejected, containers marked for return, and the future of American wheat exports hangs in the balance. This isn't just a business story, it's a human one. Livelihoods are being upended, families are left in limbo, and communities that depend on trade are feeling the ripple effects of decisions made in distant capitals. The shockwaves are redrawing trade patterns that stood for decades. Exporters scramble to reroute shipments, truckers find new destinations, and everyone from farmers to shipping companies is forced to adapt overnight to a rapidly changing landscape. As China closes its doors to American wheat, the search for new markets becomes urgent. Exporters look to alternative buyers, hoping to forge new relationships and keep the wheat moving before silos overflow. The rejected wheat piling up in storage isn't just a symbol of lost opportunity, it marks the beginning of a seismic shift in global agriculture, one that could reshape the industry for years to come. The world's wheat trade is being rewritten in real time. As new winners and losers emerge, the only certainty is that the landscape of global agriculture will never be quite the same again. At the heart of this crisis is a single, powerful tool, one that governments have wielded for centuries to shape economies and influence global power: the tariff. Tariffs are more than just taxes, they are levers that can shift the balance of entire industries, and in this case, they've upended the world of wheat. In a dramatic move, China has slapped a staggering 140% tax on U.S. wheat, instantly doubling its price for Chinese buyers. This isn't just a number on paper, it's a seismic shock to the market, making American wheat nearly impossible to afford overnight. Imagine walking into your local bakery and seeing a loaf of bread suddenly costing more than twice as much, not because the recipe changed, but because of a government-imposed tax. For millions of Chinese families, this is now a reality, and it's reshaping daily life. For Chinese millers, American wheat is now simply unaffordable. The mills that once relied on steady shipments from the U.S. are forced to look elsewhere, or risk shutting down production altogether. The ripple spreads from the factory floor to the family table. This isn't about preference, it's about survival. No business can absorb such a cost and stay afloat. Companies are left scrambling to find alternative suppliers, often at higher prices or lower quality, just to keep their doors open. The tariff acts as a financial wall, blocking U.S. wheat from the Chinese market overnight. Shipments are halted, contracts are canceled, and the flow of grain that once connected two nations is abruptly severed. It's a direct response to U.S. tariffs on Chinese goods, turning wheat into a pawn in a much larger trade war. What began as a political maneuver has now become a battle with real consequences for everyday people. For American farmers, their crops are caught in the crossfire with no way to compete against such a price hike. Fields that once fed millions now overflow with unsold grain, and livelihoods hang in the balance. Negotiations and quality no longer matter, only the bottom line, and the numbers don't add up. Years of building relationships and trust are wiped away in an instant, replaced by uncertainty and fear. The result, a once vital trade route is now closed, and the U.S. must face a new hostile market reality. The infrastructure built for global trade sits idle, a stark reminder of how quickly fortunes can change. Exporters scramble to find new buyers, racing against time and mounting losses, but the damage is done. The trust and stability that took decades to build have vanished almost overnight. The tariff wall may be invisible, but its impact is absolute. It's not just a barrier to trade, it's a barrier to hope for thousands of families and businesses on both sides of the ocean. The US-China wheat trade has been fundamentally altered, perhaps for good. What was once a symbol of cooperation is now a casualty of conflict, and the path forward remains uncertain. The ripple effects are just beginning. As markets adjust and new alliances form, the world watches to see who will adapt and who will be left behind. For Chinese buyers, the math is brutal. US wheat now costs far too much thanks to tariffs. These tariffs, imposed during escalating trade tensions, have driven up the price of American wheat to levels that simply don't make sense for importers. What was once a staple of international trade has become a luxury that few are willing to pay for. No business can absorb such a spike or pass it to consumers without backlash. For bakeries, noodle makers, and food companies across China, the cost increase is immediate and painful. If they try to raise prices, customers push back or look for cheaper alternatives. If they swallow the costs, their profits vanish. The result? Orders are canceled, and American wheat is left stranded. Shipments that once moved swiftly now sit idle, waiting for buyers who may never come. Warehouses fill up, and the flow of trade grinds to a halt. But it's not just the price. The threat of new port fees and political retaliation adds another layer of risk. Every shipment could face unexpected delays, inspections, or even outright rejection at the border, making the process unpredictable and costly. Chinese importers fear their own ships could face penalties in US ports, making any deal with America a gamble. The risk isn't just financial, it's reputational too. One wrong move, and a company could find itself blacklisted or under government scrutiny. Meanwhile, China's record domestic harvests mean they're less reliant on imports than before. Investments in modern farming and storage have paid off, giving China more control over its own food supply, and reducing the urgency to buy from abroad. With more homegrown grain and other global suppliers available, China can afford to walk away from US wheat. Countries like Canada, Russia, and Australia are eager to fill the gap, offering competitive prices and fewer political headaches. The American flag on a wheat sack now signals high cost and high risk. What was once a mark of quality is now a warning sign for buyers who want stability and value. Chinese buyers are simply making a rational business decision, protecting themselves from financial fallout. In a volatile market, minimizing exposure to risk is the only way to survive. In the world of commodities, reliability and price rule. Right now, the US offers neither. Traders and importers are quick to adapt, shifting their focus to suppliers who can deliver both. The shift is swift and decisive. American wheat is out, and alternatives are in. Trade routes are being redrawn, and long-standing relationships are being replaced by new alliances. The trade war has made US wheat untouchable in China. Headlines tell the story. Deals frozen, shipments blocked, and a once booming trade brought to a standstill. The consequences for American agriculture are profound. Farmers face mounting losses, empty silos, and an uncertain future as their biggest customer disappears almost overnight. The global market is moving on. As China and other buyers look elsewhere, American wheat is left behind, a casualty of politics and economics in a rapidly changing world. For American farmers, the fallout is personal and painful. Wheat planted for China now floods the US market, driving prices down. Lower prices mean shrinking profits, sometimes losses, while costs for seeds, fuel, and loans remain. Some face the end of family farms that have lasted generations. The pain ripples outward. Local businesses, equipment dealers, and rural towns all feel the strain. The trade war, once distant politics, is now a crisis on Main Street. Farmers must choose: sell at a loss, pay to store grain, or hunt for new buyers in a crowded market. Storing is costly and risky. New markets are hard to find. Many are left in limbo, waiting for a resolution that may never come. It's a season of anxiety and uncertainty. The future of American farming hangs in the balance. The crisis doesn't stop at the farm, it hits exporters hard. Companies that invested in grain elevators, ports, and logistics now see their operations stall. With China gone, contracts are canceled and warehouses overflow with unsold wheat. Exporters scramble to find new buyers, but the market is flooded and prices are low. The slowdown ripples through ports, railways, and trucking companies, cutting jobs and hours. The entire supply chain feels the shock. Exporters must now build new relationships and navigate unfamiliar markets, an uphill battle. Replacing China's demand overnight is impossible. The U.S. agricultural sector's reliance on a single buyer has become a glaring vulnerability. The silence at the docks is a stark reminder of what's been lost. The search for alternatives is urgent, but the path forward is uncertain. As the U.S. is shut out, Canada steps in. Free from tariffs and trade war tensions, Canadian wheat is suddenly in high demand in China. Orders surge, and Canadian farmers seize the moment. Canada's stable trade agreements and political neutrality make it a safe, attractive supplier. For Chinese buyers, the choice is clear. Canadian wheat means no penalties, no risk. The boom is a lifeline for Canadian agriculture, offering strong prices and new markets. Exporters ramp up operations, forging long-term ties with China. Canada's windfall could reshape North American agriculture for years to come. Canada's appeal isn't just about tariffs, it's about quality and reliability. Canadian wheat is prized for its high protein and baking qualities, making the switch easy for Chinese millers. Efficient railways and Pacific ports speed shipments to Asia, keeping costs low. Canada's stable trade policies offer predictability in a volatile world. Chinese buyers trust Canadian suppliers to deliver, free from sudden political shocks. Canada is positioning itself as China's long-term wheat partner, not just a stopgap. The industry is investing in relationships to make this shift permanent. In a turbulent market, Canada's reliability is its greatest asset. The wheat trade map is being redrawn. The U.S., once dominant, is sidelined in China, forcing its wheat into other markets at lower prices. Canada and others now sell at a premium to China, creating a fragmented two-tiered market. Countries rethink food security, seeking diverse suppliers to avoid future shocks. The market grows more complex and politicized, with tariffs and alliances shaping every deal. For farmers and exporters, risk is the new normal. The lesson: global agriculture is deeply interconnected and vulnerable to political storms. The old patterns are gone. A new, unpredictable era has begun. Everyone in the wheat trade must adapt fast. The rejected U.S. wheat shipments tell a bigger story: how politics can upend global trade overnight. Tariffs have built a wall around China's market, leaving American farmers and exporters in crisis. Meanwhile, Canada steps in, turning U.S. misfortune into its own opportunity. The trade routes for wheat are being redrawn, with long-term consequences for food security and economic stability. The episode is a stark reminder: reliance on a single market is risky, and global commerce is always in flux. For those on the ground, the impact is real and immediate. The world is watching as a new chapter in the wheat trade unfolds. The future is uncertain, but the story is far from over.